Good morning, everyone. Welcome to the Stock Market Morning Prep video for Monday, December 8th. On Friday, we did get a little bit of movement. We had a green across the board. Dow Jones up 58, NASDAQ up 11.5, S&P up $3.45, and the Russell up $9.42. Although a very, very quiet day, we did end up pushing a little bit more further to the upside, yet again making new highs. We are coming into some seasonal weakness for the first 2 weeks of December. We have tax selling that starts around December 5th, 6th, and ends right around December 15th or so. So we could see some weakness since we have not seen any weakness since the October lows. I just want you guys to be aware of that, okay? Moving on. Now, obviously, after when that is concluded, we do get a big push into the last 2 weeks of December, and of course some follow-through going into January. But remember, anything can change. That's just history. Usually does repeat itself, so just keep that in mind as well. So we do have a little bit of weakness in the beginning, and then towards the end of the month going into the holiday week, we get a nice little push to the upside, and people feeling that euphoria of the Santa Claus rally. We are heavily one-sided, as you know, as far as sentiment's concerned. We're all bullish. Everybody's bullish, and that's also another sign of caution, and just wanted you guys to know that. I'm just going to show you kicking off the week with a couple of indicators that you've seen before. Advanced decline in front of you. As you can see, we are making highs, and the breadth of the market is not. That is also a very poor sign that the markets are not following suit. So we just have some stocks and ETFs, mainly ETFs really, that are moving, and stocks really kind of sitting where they were, and I'll show that to you in the next chart. Stocks above the 50-day moving average, we have an 83 percentile. These are the areas where we usually get a pullback. I'm not saying anything deep for the moment, but I do see looking for some sort of a pullback. When you add the tax loss selling period, we very well could get a couple of days, if not more, of some pullback, of a pullback in the market, excuse me. And that's going to be healthy for the markets. That's something that you want to be looking at. So have an opportunity to kind of maybe buy in for a year-end rally, okay? But stocks above the 50-day, 83.5%. Then we have the NDX 50, which is stocks above the 50-day on the NASDAQ. Again, 89% at extreme level, guys. And then when you throw in the complacency of the market, everybody one-sided, you have to be careful, okay? Not saying that you have to sell the market or I want you to go out and shorting the market. But just be careful that we haven't had any weakness since the October lows, as you can see. And it's just the markets are just a little bit stretched, I think. And with that rubber band being stretched, as we all know, we always come back to that mean. Here's the weekly chart of the S&P. As you can see, the spiders, we are way above the 20 and, of course, the 8. And as you can see, this is the start of the week on very low volume since the October lows. We have had diminishing volume every week since then, and that's not really a good sign. Now, we all know that volume has been much lighter thanks to the dark pools, but you have to realize that volume is still volume, and whatever the volume is last few years, that's what you would take into consideration. This is not encouraging at all, although we do have price moving, and price is what pays us, so we have to understand that as well. Okay, now let's take a look at the daily chart here. Daily chart sitting at the highs here is bullish, not a question about that, sitting at the highs. As you can see, the Bollinger Bands here in the orange are starting to tighten. That means energy is starting to build in the markets, and that we should be moving either up and or down. It doesn't say which way, but we should be moving shortly, vacating these areas here, this price at 208. Now, it'd be nice to come into that 20, and so I'm still looking for a 20-day touch in the S&P. As you can see, the MACD stochastics are way overbought and starting to unwind a little bit, and that's a good sign. So we can get some of these unwinding of some of these indexes into even a neutral reading. That would be even better for the markets. I'll show you the 30-minute, as you can see. And this is just really just terrible since the October lows. Excuse me, not even the October lows. Since October 31st, the first week in November, the first day of November, I mean, it's just been horrible. We had 2 days up. We had 5 days literally sideways, 2 days up again. And then again, 4 or 5 days sideways. We had 1 day down, 2 days up, and then 2 days just literally just chopping around here. So Not the greatest price action for trading, that's for sure. But again, if you are aware of your surroundings, you don't need to trade that much. Little selective trading can still put money in the bank for you guys. Now here's the diamonds. Dow Jones again starting to move up a little bit here. As you can see, energy is building, and it as well made new highs. So we're looking at 18,000 in the Dow Jones, and I don't see why it can't touch that at least by the year's end. Again, we're coming into a little weakness this morning, but that doesn't tell me why we can't literally touch that by the year end. IYT, as you can see, we had a nice big sell-off that one day, and now we've really pretty much taken it all back to the upside. Again, look at the Bollinger Bands. Energy is building, so be aware of that, okay? Let's be aware of where this market is headed here, okay? And let's take a look at two more. Now, here's the IWMs. We literally have gone nowhere, as you can see, sideways for all of November and the start of December. So we've gone nowhere. We've been down to these levels. We've been back up to these levels. So energy is building as well in the IWM. And again, we just need to be complacent. Need to be aware of our surroundings and not be complacent here, okay? And if you are long, just tighten up your stops and just kind of follow what the market is going to do. And if you do want to hold until year end for that rally, then just be aware that we might get a little bit of a pullback because of that tax loss selling, okay? And lastly is, as you can see, the Qs have gone nowhere in the last 5 days. So we've gone up, and then last week we really have gotten nowhere. We have an inside day all week. So not really the healthiest trading, and it's going to get worse, guys. After this week, trading should really start to slow down the week of Christmas, and then, of course, that other week after Christmas and before New Year's, okay? So just keep that in mind, all right? And use your stops. Just, play the game, and let's use our stops here until we get through this holiday season. Have a great day, and we'll speak to you tomorrow. Take care, everybody.